Hello, my name is Vlad. I'm CEO and founder of Yellow Tunnel, and today we're going to have our weekly strategy roundtable where we talk about current market conditions, discuss earnings from regional banks, from major banks. We had ASML earnings today. Where do we see opportunities in the market and what to trade? Discuss the risk in terms of path of interest rates, geopolitical risks. And again, how to rebalance your portfolio. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Ken, welcome back. Kevin, Louis, Martin, Mike, Tony, welcome. This is my brief bio. We have a lot of people today, so that's good. My background is in technology. I always worked in Chicago startup companies. Options Express was the first. Then Groupon, a lot of people know Groupon, Mediaocean, worked at hedge funds like Pick 6, different broker-dealers, started TradeSpoon and Yellow Tunnel about 2012. So it's 14 years, because I wanted to manage my own money and build technology to help generate signals and manage these signals and then expose it to the subscribers. Keith Harwood from Options Hotline has joined me about 2 years ago, and together we are. His background is in trading. He used to trade on the floor in hedge funds, market maker. So he has a vast experience trading options, and he's also mentoring subscribers how to trade and how to build trading plans. So between two of us, we probably 30 years, 40 years of experience managing and trading. Disclosures are important. You can see the relationship between Yellow Tunnel, Vanguard, TradeSpoon. Which is important. I'm here to show you what I do in my own account based on my own risk tolerance level for general education purposes only. If you haven't seen the slide before, I encourage you to visit optionscreening.com so you can understand the risk and suitability associated with trading stock and options. All right, before we jump into trading psychology, let's look at the market. Let's take a look. So let's look at Yellow Tunnel, right? You can see aggressive power trader on Yellow Tunnel. You can see a similar model on TradeSpoon. Basically, if you look at aggressive power trader, you look at the spiders, model sees that we're still trading, long-term we're trading in uptrend, that potentially we can get to 780, 800 level in the next few months, right? July has been a strong month, usually positive returns. But we've been trading kind of consolidating or trading sideways since the May, right? Since the beginning of the conflict back in February, market sold off, then rallied and actually made new highs. But since first week of May, June, half of July, we're trading sideways. And Spiders has a lot of overhead resistance at that 760, 763 level. So model basically starts in the next 10 days or in the next months, potentially a retest of all-time highs and a breakout. So model still sees an uptrend in Spiders. And every day it provides you signals, which stocks it thinks it can outperform the market. So let's take a look at the model. You can see market model is correct. I agree with the model. You do have this kind of you can call it rectangle, you can call it some kind of head and shoulders, triple top, it doesn't matter. But you do see kind of a strong support, June lows of 720, and overhead resistance at 760. And Spiders exactly at that level, right? Usually I refer to SPX because that's the most liquid name, right? And there's a lot of positioning between especially among institutional trading, wealth managers. I don't know why I need the headphones. I should not need that. Sorry about that. But you do see a pattern, kind of a slightly higher lows. We've been dancing around 50-day moving average and retesting 7,600, right? So this is kind of a nice round number. SPX likes round numbers because these are the strikes that you have, billions of dollars worth of gamma and positioning, right? People have buying and selling calls and puts at those levels. So 7,600, we're in the middle of expiration. Today, VIX expires, and then Friday we have July expiration. So potentially, if the earnings season started, on a stronger note, right? You see banks have record earnings, So we have industrials like General Electric announcing earnings. If you see industrials and banks are doing well, and regional banks are doing well, and 20% growth year over year, which is higher than people anticipated, then you have a breakout to the upside, right? That would be a bullish case. That is my base case, that eventually we do break out. I don't know if it's going to happen tomorrow or more likely next week after the expiration, but that's the core scenario. There's always risks in the market right now. Escalation in the Middle East is the risk to the market, that inflation will set the path of interest rates, right? And right now, if you look at the 10-year yield and 2-year yield, you do have yield curve steepening, which is positive for the market, right? We don't want to have a flat yield curve. We want 2-year to be significantly lower than the 30-year. That is considered to be a healthy economy, right? That is good for the banks and for industrials and just in general. And we do want a weaker dollar, right? So dollar is down, 10 years down. Warsh has been presenting, press conference to the Senate on state of the economy. And, I briefly was driving my mother today to the hospital, and I was listening to it. And he's bullish on AI, right? He's basically saying this is equivalent of, industrial revolution in 1870s, or car manufacturing, or radio, right, in beginning of the 20th century. This is, or cable, right, in 70s, 80s. But this is definitely an innovation that creates a lot of jobs, a lot of prosperity, and obviously you have to raise a lot of money, right, as soon as he's to support that. But he sees it as a positive catalyst. And as soon as he said that, Amazon is up 3%, the stocks that been under pressure, Google been up, under pressure. And these, again, a lot of rotations. You can see a lot of rotations in the stocks. Stocks that have been underperforming are now outperforming, and stocks that have been outperforming, like semiconductors, are underperforming. Even though SML had a strong earnings, was up, I think 4%, 1830, 40 points. So 3-4% up. At some point it was actually down, 1747. So again, there's two narratives. One narrative, that what Warsh said today, right? He's the Fed chair. Basically, that it is warranted for Google and Amazon to raise billions of dollars to support infrastructure. It's a private market. They see something, right, that is obviously going to stimulate the economy and the grow economy like we haven't had since cable, or since, I don't know, radio or refrigerators, right? Something like that. But on the other hand, everybody's concerned about internet bubble, right, in 1990s, that ended where there's so much capital has been raised, did not provide immediate return, right? We build infrastructure. I remember building these last miles, and fiberglass and connectivity. And then, there was just too much capacity, right? And as soon as the interest rate starts going higher, it was hard to refinance the debt, right? You don't get, revenue doesn't support it. And, you have the internet bubble of, end of, to 1999, 2000. So those are the two narratives, and based on the day it changes. But the most important is interest rates, right? If interest rates continue to go higher to 5%, then it's a valid concern, right? As soon as interest rates drop, then obviously the market is supportive. Day-to-day fluctuation do not make a difference, but long-term support resistance do. So 50-day moving average on 10-year yield and 4.5 is a line in the sand that I'm watching, right? If we are above 450, then that is a concern in the market, and market is probably not going to break out. But if the 2-year yield is able to actually change this uptrend and start rolling over, right? Because CPI data has been better than expected, right? Or PPI is better than expected, right? And Warsh is optimistic that potentially we don't need to raise rate hike, to do rate hikes, because strong economy, it's growing, employment is under control, and inflation is showing steady decline. Then, if the 2-year breaks through the 50-day moving average, then that will be supportive for the market. If dollar drops below 100, right, that's the line in the sand, this round nice number, and dollar drops, right, that will be supportive for the economy. So those are the most important indicators, right? I'm still kind of a top to bottom approach. I think bond market is important, currency market is important. There's only so far, microns and bells can go. So this is extremely important. So that looks good. Crude oil is up, right? On escalation in the Middle East, the line in the sun is 80. 80 has been a strong support. Where anything above 80, then again, fear of hyperinflation, higher for longer, and potentially raising rates before the end of the year, right? But as long as it's below 80, then it will be a bullish case, right? So we kind of, the oil market, the energy market, the bond market, the currency market, the SPX is trading right kind of sideways and trying to make major decisions. Underneath the surface, if you look into, if you peel the SPX and look at different sectors, look at different industry, there is still a lot of rotation on daily basis, right? You can see it in Google today, right? Google is up 4%. But if I look at or Microsoft, right, the hyperscalers, right, as soon as they've been trending up because they're oversold. They just need a positive catalyst. War speech basically given a green light saying that, hey, these guys know better than you, and and their investment is justified. And then, Amazon is up 3%, Microsoft is up 3%, Google is up 4%, 3.5%. But but the semiconductors, kind of a completely different story, right? They're below 50-day moving average. And in general, SMH is sitting on important support. I would say, 550. But it's below 50-day moving average. It's testing 550. If it drops below 550, right, or QQQ in general, maybe a hyperscaler is not enough to keep QQQ from dropping below, I would say 680. I would say the line in the sand. Then this definitely looks like a bearish price pattern, right? Descending triangle. If above average volume, we drop, right? Even though ASML had a strong earnings, but ASML still reversed. IBM caution about, that a lot of companies are financing their AI build out as opposed to buying software from IBM. And then you have these outsized moves, right? If, a lot of people have IBM as, blue chip, majority part of their portfolio or big part of their portfolio, and 30% down, this is where position size is extremely important. Hedging is extremely important because nobody knows when IBM is going to announce earnings and be down 30%. So that's the divergence, and that's something to keep in mind, that maybe spiders didn't really go anywhere in the past 3 months. But below the surface, different sectors, right? If you look at the JP Morgan after the earnings, right? JP Morgan is breaking out at all-time high, right? Or Goldman Sachs had earnings, broke out at all-time high. So you do have financials. Next, I think General Electric is up, right? I think tomorrow. So we'll see how the industrials are going to start performing during earnings. Any questions? So for me, I would say my core scenario, if you look at the returns for July, seasonality perspective, usually July has been a strong month, right? And I still think core scenario, we do break out. I don't think we're going to get to 8,000, but 7,800, I think that's reasonable estimation, right? You can always go into AI analysis. You can type in, let's say, QQQ. What do you think QQQ is going to go? And then, look at the QQQ, right? Might also see that QQQ is still an uptrend and potentially break out, right? So we do have these tools for analysis. They only look at the price action, volume action, and earnings. They don't look at speech by Warsh or, situation in the Middle East. They just looks, here are the trends. And, if you want to stay with the trend, then obviously the core scenario, higher highs, higher lows. Value stocks, right? That would be a bullish. The value stocks are outperforming, so you have a broadening of participation, usually results to the upside. So value stocks are higher. Small caps close to all-time high, also on strong uptrend. So that would be the bullish argument. So core scenario will resolve to the upside, strong July. I still think July has been a good month, positive returns, but August and September has been negative returns, right? Or flat returns. So I would be cautious into end of August or middle of August into middle of September, end of September. This is the time where potentially after August expiration, July expiration will resolve to the upside, but then after August expiration, because of the repositioning, right? Because billions of dollars of contracts expired, people put new positions or hedge or institutional trading put new positions, right? The different notes, right, that they write, then I think it could resolve to the downside. Martin, what first? Mike Parker first. Thank you. Tony, Mike, welcome. Really happy to see you guys. And if you have questions, let me know. Medtronic, what's the exit price? We do have a position in healthcare. Healthcare has been outperforming, right? So as one of the ways to hedge healthcare, you can, Johnson & Johnson was a signal. Medtronic has been a signal. Johnson & Johnson actually down today. Medtronic, nothing has changed. It's still kind of, it is up today. It did drop yesterday on Stryker, right? Like the medical devices had a sharp pullback. I mean, healthcare in general had a sharp pullback yesterday, right? Rebound. I think it's overdone. It's staying at the 20-day moving average. Medtronic highly correlated to XLV. For now, I'm still watching this trend, 50-day moving average. If it's able to get to 86, 87, I would exit the position. You still have a lot of time, but we are in the middle of the earnings season, right? We're going to have healthcare stocks announcing earnings. Based on that, we could continue going higher, right? This trend intact, what the model signal detected, or we can roll over, right? 78, 80 would be the level that I would watch. For now, I think 80 strike held. If you drop below 78, then I would probably exit the position. So it's below 78, I would be concerned about this position. And at 86, I would take the profits on stock position. Unfortunately, I actually did the weekly option, so the clock is ticking, right? We need a follow through, right? We need bulls to try to close this gap. It tried to do it, got rejected, right? We got as high as 82. So we'll see. I don't think there's any. I think UNH, right? So we do have United Health Group, right? United Health Group is announcing earnings tomorrow, right? So if UNH delivers strong earnings, you can see it kind of broke through this downtrend, right? And trading at 400. If UNH can close this gap, right, then I think Medtronic is going to follow. Obviously, if it disappoints, it's been a volatile stock and it's down 10, 20%, then potentially could pull Medtronic below. So for now, I'm watching. Did I add QQQ at 710, 760? So let's look at that. I actually exited QQQ today. We do have a closing bell in 30 minutes, so probably add to QQQ. But the question was on dynamic power trader. So aggressive power trader is where you have signals, right? So you can look at the history of the signals, right? You can say, okay, Vlad, what was the signal yesterday? Right? Apple, right? Apple, American Express were the signals yesterday. Apple was a great signal. I think Martin traded Apple. Hopefully he held on to it. Not sure. I actually exited because it reached all-time high. But it was a good signal last week. It was a good signal this week, and Apple actually broke out, right? This is where you might think about either adding to Apple, right? Day 1, day 2, day 3, day 4, we're above the breakout level. Passive least resistance, Apple continues going higher. Obviously, there are risks, right? That they're behind the AI revolution. They don't have their own models and competition, and the projected number of downgrades, right? Analysts downgraded Apple, I think, a couple of days ago. That's why you see this down. But it's still going higher, right? So that's aggressive power trading. You have signals generated every day. You can look at these signals. That's how I don't trade all of the signals, but I use these signals to decide what to trade, right? So Apple was a trade last week, this week, and you can use that. You can watch the recordings, right? Keith and I have live trading room every day, the opening bell and the closing bell, and you can watch Keith and I how we trade, right, on a daily basis. You can also look at the workshops if you want to learn about portfolio rebalancing, portfolio construction, iron condors, options. Literally, we have 14 years worth of webinars. You can see our latest webinars under market plan, right? I encourage you to view. This is, iron condor is iron condor, but this uses example of current market condition, current level. So I encourage you, if you want to learn about iron condor, I use iron condor or credit put spreads or 0 days till expiration options. This is where I would use it, right? Because in the live trading room, usually I concentrate on trading. Like earning power trader was a good trade today, right? Morgan Stanley announced earnings. I decided to trade Morgan Stanley yesterday, right? And this was a good trade, iron condor, right? I sold call spread, sold the call spread yesterday, collected 34 cents, sold the put spread, collected 36 cents. So I collected 70 cents. It's a $2.50 spread, right? It's a $2 spread. So my risk is $2.50 minus 70 is $1.80, right? 70 cents, but 70% of the time the strategy works, right? 70% of the time the strategy works. So I collected the premium and was able to close it for 7 cents and 5 cents. All right. If you don't understand iron condor and you want to learn about this, okay, then you go to our libraries and you can look at how I manage iron condors, or you can go into Active Investor Workshop, type in iron condor, and it's a popular topic. We've been 2022, 2020, 2019. You'll see different presenters, different people give you our take on how to trade condors, right? So it's a great learning content and it's free, right? All you need to do is to create an account and log in to Yellow Tunnel and you have access to these tools. So now the question was, we'll do weekly trader. So weekly trader was another signal generating, right? It's a signal generating. It uses AI models, neural networks. We use Claude Code to run different simulation analysis using R scripts and neural networks. And this runs every week and gives you signals. So this week, Bank of America. Granted, Bank of America had earnings and it did well, but some Bank of America is going higher, right? CHRW, right? So Bank of America is doing well. It was a signal on Sunday. CHRW is at all-time high. This was signal on, Sunday over the weekend. And again, it helps you with the portfolio construction and portfolio rebalancing, right? You can use these signals. You can, if you want to trade options, you can trade options, right? You can look at the buy and sell levels, open, close, trend, and if I happen to trade any of these signals, you'll see it in orders and position. And same thing, you can look at history and basically say, well, the model runs every week on Sunday, so you can see, okay, what was it last Sunday? What was it Sunday before? And look at your portfolio. Martin asked about QQQ. So dynamic power trader, these are positions that I'm managing in real life that consist of these signals, right? I don't trade all of the signals. I try to build a portfolio that's balanced, that does not take a lot of risk. We have different subscribers. Some people want to quadruple their money in 2 days. You're probably going to have a hard time. You can use the signals, right? You can trade options. You can quadruple your money. If you buy Apple option for 50 cents, you can close it for $2 or $4. But these are outliers, right? You can use the model, you can use the signal, but most of the time I don't buy single options. I would buy spread, right? Or I buy stock, right? Because majority of our subscribers are either retired or semi-retired, right? And they don't want to see their portfolio down 20-30%, right? I'm making sure that your portfolio grows and drawdowns are small, right? Drawdowns are under 10%. And the only way you can do this, if you have 4 active positions, 2.5% of account value at risk, right? So for options trading, for high beta stocks, I would recommend only 4 positions, 2.5%, especially when you start trading. This way, your drawdown is 10%. Most people are comfortable with that drawdown. You keep 30% of your portfolio in cash. If you ever go to our live trading room, I propose to have 30% of your portfolio in cash, especially going into August and September, right? When, if we still bomb in Iran end of August and oil prices reach 100 again, well, guess what? Probability of rate hikes going to increase, and refinancing debt is going to be difficult, and potentially Fed is forced for price stability, and that means rate hikes, maybe 1 or maybe 2 before the end of the year, maybe September, maybe October. So, but this way, that you have only 10% at risk, that barbell approach, right? That Nassim Taleb talks about a lot, right? And then 30% in cash, and then the rest of the 50-60%, I'm a little bit more aggressive by nature, so I trade QQQ, right? So I do have Amazon stock. I'm trying to exit at 264, and then QQQ I did sell at 723, right? I've been trading. If you look at my QQQ position, I have kind of a core positions that 40-50% of the time that I always hold, right? Because I think we're still in bullish market, right? I don't think we're trading in 1999. I think we're trading in 1997, right? 1998. I still think there's a few more years of after midterm election. There's still at least 2 more years of this boom in capital raise, in build out of infrastructure, and for adoption of AI. You can see it in IBM, right? The reason IBM stock is down is not because the economy is falling apart, but because Fortune 500 companies are reprioritizing their budgets, right? They're trimming some of the, positions, and they're trimming their budgets on software and miscellaneous expenses, and everybody invests into AI, right? Because they do see a huge productivity increase. And you can see it even on a small company like Yellow Tunnel. If you go and you talk to our bots that is run by AI and the data centers in Microsoft and Google, you can see that these bots are very intelligent, right? 9 out of 10 questions they answer correctly. If you go to contact us and you call this number, you probably will not know that this is actually a bot. It does give you disclosure. It says I'm a bot, but when you talk to it, you probably won't be able to tell the difference, right? And this is just Yellow Tunnel, and there is, it's a small business. There's millions of companies like Yellow Tunnel, right? And they're all adopting, right? Maybe not as fast as Yellow Tunnel because we've always been at the forefront of AI, but they're adopting, right? And it's just a matter of time. So that's a kind of a long-winded answer, right? What happened to Dynamic Power Trader? So I've been trading around this position to answer Martin's question. Sorry, Martin. Thank you for being here. I know you put a lot of time in learning, and I appreciate that. So I've been trading on QQQ. Martin asked, did you buy it at 310? Well, I didn't catch the 210. I do usually have an order to buy at 710. I've been trading this multiple times. It's at 718. I guess I'm late. I had to take my mother to the procedure in the hospital. But it did reach 710. I think 700, 710 holds. I still think the course scenario we're going higher. I didn't catch that. At this point, I'm a little bit concerned about ASML earnings, right? You see LRCX is down 4%, ASML, strong earnings, record earnings, but still initial reaction is initial reaction higher, but then sell off. So I'm a little bit concerned about QQQ. I do have a put spread to hedge my position. So, but I mean, 710 and 700, I think, are buyable levels, right? Especially if you have cash, right? If you have 30-40% cash and you sold at 720, yeah, I think 700, 710 makes sense to buy. Right now, I wouldn't buy because it's at 718, but by end of the session, you know, if we're at 710 again, I would probably buy again, right? I would buy it again because it kind of reaches both extremes. So that's dynamic power trader. These are actual trades in my brokerage account. You can type in your phone number, you get SMS message, right? You'll get an email every time I trade, and you have a recording where, you know, Martin and I, we meet every day in the morning, first session. He's there at the closing session most of the time, Martin, thank you. And then, you know, we talk about each of the position, we talk each of the order, and, you know, I answer any question. Keith answers any questions you might have, right? And if you do need help with the live trading room or your trading plan or beyond live trading room, right? If you just start trading and you're still kind of learning, right? Just like when I learned to ski when I was 19, you know, I did it on my own. I fell a few times, you know, there were a few years of, you know, lost opportunities. But as I get older and, you know, I had discretionary budget, you know, I went and hired a coach, right? And it made a huge difference in my performance. And I don't care whether you want to learn how to ski or if you want to learn how to play chess or if you want to learn how to paint or draw, right? You need somebody to help you, right? Coach you. So I do encourage you to click on contact. Do me a favor, talk to our bot. Let me know what you guys think. If you want to talk to Keith, live, you know, coach, he's a, you know, he does live training room. He helps me validate signals and manage. You can schedule an appointment, and, you know, it's free. And Keith can help you with your training plan, the goals that you have, how to meet your goals. He can help you ski better, right? He can help you ski better or play chess better or trade better, right? So that's something that you probably want to take an opportunity. Kevin, I tried to take option trade, which my big market investor high tech friend brought. But has already popped, so wait. Trade and have large amount of trades. I mean, you know, a lot of stocks pop, you know, it might be too late. You know, I think, you know, personally, I think Google has more room to run long Amazon. I think it has long run, you know, more room to run. So I'm bullish. I'm still bullish on AI trade. At some point, semiconductors are going to be oversold, but obviously they're so far from 200-day moving average or even 100-day moving average that you don't know is the bottom 580, is the bottom 550 or 500, right? Or 450 for that matter, right? I mean, earnings are unfolding, but so far, you know, ASML, you know, didn't save the day. You know, Broadcom didn't save the day. Micron didn't save the day. So I don't know. We could have steeper correction. So that's for sure. Can you analyze BB, please? Is it BlackBerry? I mean, it's a high beta, high momentum stock, right? Speculative, right? Again, going back to the AI, it does look strong. As long as we're trading above the trend line, above 50-day moving average, it's in bullish trend. You have to respect the trend. Obviously, they're not generating a lot of income. This is one of those high beta, high momentum stocks. High beta, high momentum stocks has been not going anywhere. They're losing the momentum. BlackBerry is better. Not the, you know, I mean, I know what BlackBerry does. You know, it's liquid name. You know, trade with the trend, it's down. You know, at 9 you probably exit, so you have $2 to the downside. You know, but you have $4 or $5 to the upside. So risk versus reward, I think makes sense if you're bullish on that BlackBerry. Position at 12.4. Position at $12.40. I mean, if you bought at 12.40, you're still there. I mean, I would hold. if you're down more than 2.5% and you have 4 positions like BlackBerry or similar to BlackBerry, where it's highly speculative, high momentum, high beta, I'm always concerned about drawdown in my portfolio. So then I would at least trim my position. But if you're not down more than 2.5%, it's not making new lows. It's sitting at the 20-day moving average. It's in bullish trend. Since their earnings, it's in bullish trend. Obviously, it could reverse on any news, but Chuck, what would be your strikes if you put on a new bullish put spread? All right, Chuck, you're doing put spread. You're not doing cash secured put. I'm proud of you. This is awesome. 700 to 680, right? 700 to 680. I mean, I would either select 700 or 680, right? Just depends on the premium. So let's look at that. Let's go to our friends at Avantgarde. Right, let's log in. And again, I disclosed the relationship between Tradespoon, Yellow Tunnel, and Avantgarde in the beginning, right? We do have marketing relationship. So just something to keep in mind in Avantgarde trading. But it's a broker dealer. I encourage you to consider maybe opening an account at Avantgarde if you want different strategies, or especially Yellow Tunnel strategies, segregate them and see the performance, so you don't mix them with other signals or other newsletter. I would definitely consider that. But going back to your questions, QQQ, I mean, July expiration is now. I would go into August now. And you can see high open interest, 77,000 is the line in the sand, right? You have 50,000 contracts. 680, a line in the sand, 58,000 contracts. If you sell August 700 put, you get 2%, right? $13. If you sell 680, you get 1%. So now it becomes return on capital versus, probability of success, right? I think 700, it could be there tomorrow. 680, that's much longer. So you have much higher probability of 680. So you can sell 680 put, 660 put, and get close to 1% in 2 months, which could be fine. Or if you're more bullish, more aggressive, you want to look for 2% return in by August, then you would sell 700 put. Let me know if that makes sense. Chuck, thank you. Any other questions? All right, Chuck, Ken, Kevin, Luis, Martin, Mike, Tony, welcome. Thank you for your questions. CrowdStrike. So we had signal on Fortinet, right? That was, I think, last week. Fortinet continues to go high, very strong. CrowdStrike, right? The infrastructure plays are back on, right? So still a strong uptrend, continues to go higher. Security or Fortinet routers infrastructure like Cisco, Fortinet, they are still in strong uptrend. Cisco is actually not going anywhere, but Fortinet and CrowdStrike I do like, and I think that you can stay with the trend. Obviously, it's overbought. Ideally, you want to buy that 190 or 170, but you can put a small position and kind of add to it if it pulls back, because it is overbought. Martin, 80 high, 80 high, 80. I'm not sure what 80 high is. Or is it some kind of a signal? I'm not sure what 80 high is. Oh, all-time high. All-time high on CrowdStrike. I think it is an all-time high. I mean, it's overextended, it's overbought. You do have earnings, so you have till August to make a decision, but there is no overhead resistance, right? I mean, it's overexpanded. It's basically doubled in a short period of time. So it is considered to be kind of in the bubble territory, right? That high gamma squeeze where at any given point, people are buying calls, right? Retail investors are buying calls. At any given point, we've seen what happened with Micron, right? You reach that level where when you double in a short period of time, any negative news, whether high interest rates or IBM news, and you have these sharp pullbacks, right? So that's something to keep in mind. At what point it happens, hard to say, right? I would say when Micron was at 800, I would think it's overextended, but it tripled and then it lost that momentum. So it's very hard to find the tipping point of the gamma squeeze, right? You can ask, let's see, what is gamma? I don't know how to spell, but I hope the bot still understands. All right, so gamma squeeze occurs when rapid price movements in underlying assets are amplified due to the dynamics of the market makers adjusting their position. It typically happens when a large amount of call options is being bought, forcing market makers to purchase the underlying stock to hedge their own risk. This buying activity further drives the stock price higher, creating a feedback loop. So, for example, if traders purchase calls on stocks with heavy demand, market makers must buy shares of that stock to hedge their position. As the stock rises, it can trigger move purchase and intensify price movement. To provide more information, okay, give me a name and email. Okay, but you understand. Thank you, Martin. Appreciate it. All right, so we went over dynamic power trader. We went over earnings power trader. This is where I trade spreads. Very aggressive holding time, usually 1 or 2 days. But this is where I risked. What did I risk? $1.80, right? $1.80, and I made 60 cents, right? So 30% return on the risk taken, right? In relatively short period of time. Sometimes I would trade single calls or call spreads where you can make 100% return, 200% return. So these, what I would say, high momentum, high beta, speculative names where you can have outsized returns, right? You can make 30% return in 1 day. So that's would be example of earnings power trader. Profit accelerator. If you only comfortable trading stocks, then you can go to Profit Accelerator and find stock ideas. You'll get email about which stocks I'm buying, and that will be Profit Accelerator. Any questions so far? All right. If there are no questions, I'll put some links. So I think contact us would be the first thing I would do. If you have time, just talk to Keith about how to help. If you have questions, you can have one-on-one consultation that he can help you explain how to take advantage of any of these services, right? So I just posted that in the questions, the link. He can help you with education, training, or questions about trades or specific stocks, So schedule consultation when you have time. If you're interested in a platform, if you want to track your trades and performance, or if you want to do auto-execute some of our signals, then I would go into this link. Sorry. So, you can auto-execute some of our signals, or you can just open an account, 65 cents a contract, or commissions. If you're paying more than 65 cents, you can save a lot of money by opening an account and trading at Avantgarde. Any questions? Okay, so contact us, and we do have a promotion this week. You can sign up for Aggressive Power Trader for as low as $7 a week. It's $97 for 3 months. $30 a month, $7 a week. Very cost-efficient way to get free education, get access to Keith and I, participate in live training room, and watch the portfolio. And if this fits your trading style, then some people been with us for literally from day one. So we do have a few dedicated subscribers, and some people stay for years. So some people, it's not their trading style, so I totally understand. So try it out. Let me know what you guys think. But I appreciate everybody. I appreciate the returning subscribers. We have few. Tony, Mike, this is the first time. Schedule consultation with Keith. Talk to him one-on-one if you have any questions. If not, I mean, we have a pretty good turnout, so I'm going to stick with Wednesdays at 1 p.m. Chicago time or 2 p.m. Eastern time. And I will see you guys next Wednesday, 1 p.m. Central. Again, I appreciate you joining, and hopefully I'll see everybody next week. Apple, I think, was not profit accelerator. Apple last week, I think, was in dynamic power trader, so I closed it. But if you look at dynamic power trader history, I think last week, yeah, this was one of the positions. So, but at this point I closed. But last week in dynamic power trader, we did trade Apple. Chuck, I would do $20 spread, so 700, 680 or 680, 660. Apple was profit accelerator too. Yeah, Martin, Apple wasn't profit accelerator. That's true. Yeah, if you go to profit accelerator and you look at the history of last week, it was in there as well. Correct. I didn't get a chance to look at your yellow tunnel trial secretary. So is that still available today? Yes, Kevin, just click on here. Go now, it's still available. So, I was actually planning to put on a new special, earnings power trader, but this one is still up there and probably going to stay there for at least till tomorrow. So either find the email or you just click on here on the header of the yellow tunnel. I appreciate the opportunity. All right, guys, thank you very much. Have a great day. Thank you for joining. I appreciate everybody's time, and I'll see you guys soon. Thank you.